Hi, welcome to the video day, 6th of August, it's Sunday. In today's video we're going to be looking at a simple way to get into and hold big trends. Now, in terms of if you want to catch really big trends, you need to look at the fundamentals, sentiment towards them, then you can just use simple technical analysis to time and manage your trades. Now, we looked at the European currency just in a video around about 10 days ago. We felt they would be going down on the USD. Now, they have gone down on the USD, but they've got far more downside to come in our view. We look at 5 pairs in this video. They're all really good risk to reward trades. We'll be looking at GBP USD, Euro USD, and then 3 Euro correlated currencies: the USD against SEK, Swedish krona, NOK, Norwegian krona, and against the PLN, Polish zloty. We'll go over to the charts in just a moment, but just before we do so, if you want to learn all our trading techniques and check out our daily technical sentiment analysis of 14 FX pairs, all you need to do, go to the link beneath the video and you can click it and get live access to our member center. You can also follow us on Facebook, join our Facebook group of traders, join our free mailing list, and check out our free daily research. Right, let's take a look at the trade setups. It's going to be GBP USD first. Right, just going to look at speculative positioning first of all and the sentiment. Now, in terms of this chart, I showed it in my last video, and it just shows large speculators positioning in GBP USD. You can see here, really big long position where my cursor is, and then the big fall to the downside. Speculators built up a position which was almost equivalent to this one here. At the time, the pound was still going up, but it did warn of a break, and we have seen some downside in the pound, and there's more downside to come. Now, in terms of this chart here, this is the latest COT Net Traders positions. If you're unfamiliar with this report, it's our favorite sentiment tool. Did a video a couple of weeks ago on how you can use it. Just going to go through briefly here for anyone new watching. You've got 2 groups: commercials, they're hedgers, they tend to be smart money at turning points, and then you've got large speculators. Okay, now in terms of when the 2 groups really diverge, the odds are it's going to favor break in favor of the commercials. They're hedgers, they're not going to move their positions aggressively unless they think prices have moved too far from fair value. You can see they think prices have moved too far from fair value, they drop heavily short. Speculators take up their biggest position long since 2014. You double top and then you come down. Okay, now we have seen some lightening of positions since I did my last video, but they're still extreme, and it still points to more downside in the British pound. Okay, so why are traders so enthusiastic about the pound? In terms of the market, they think the Bank of England are going to raise rates above 6%. They might do, we doubt it, but that's in the price. Okay, they also have an optimistic view of the UK economy and also European economies. Just want to show you this chart here. The US economy is actually doing better. This is activity data, continues to surprise to the downside of both Euro area and the UK. Well, in the US it's been surprising to the upside. So the US up here, obviously UK and Eurozone down here. Eurozone is going into recession, so is the UK. So the US has a better economy. It's got a really good yield in terms of interest rates. We think that is why the USD will strengthen going forward. Just want to show you another chart here. This is leading indicators, which is manufacturing new orders, PMIs since June. Look at the US, nicely above 0. The UK here, Eurozone here, both negative. Only China is doing worse on this chart. So you've got a combination in favor of the USD, which I think is a really good one. Good yield and a robust economy, and it can also get safe haven flows. We've got risk on in the markets at the moment. If we get risk off, then that will hurt the Europeans against the USD. I'm just going to use the chart from a member center because the levels to watch in this one are extremely simple. Now, in terms for anyone who didn't see our previous video, we took a trade on the break below 131. We came down and we got spiked out on this red here. Okay, just sold back through these blue bodies, and we moved a little bit to the downside. So we're in 129.20, 127.37 at the moment. Now, in terms of where we see this one, we can break below support at 127. That is a sell with a stop behind 128. You can see our stop at the top left, and we think we should go down to 124, then 122 as speculators get taken out on stop. Now, in terms of what if we do break higher, we've got our stop tight behind this level. If we break 128, it's simple. We just sell back through the level with a stop back behind 129. I haven't drawn the level in. That scenario hasn't come to fruition yet, but that is what we would do. We don't see prices roaring away to the upside with so many speculators already long. So yeah, through 128, sell back through the number, stop behind 129. If we hit 129, which I doubt, but it could happen, of course, I'd sell there, stop behind 130, this big red tail. So very simple trade setup. It's worked well for us so far. We got the turn, and hopefully we get some more downside in this pair. Right, let's shift over to the next pair, which is going to be Euro USD. Right, we're on the COT Net Traders. For the euro, I've highlighted the three biggest divergences between commercials and speculators. Now, in terms of the sport, we're not interested in every twist and turn. We just want big divergences. So in this one here, we step up and we top out and come lower. Over here, another step up, continue to the downside. Here we come up, we top out, here, and move to the downside. Here, speculators have not really covered that many shorts. I mean, some may have been covered, but new specs are coming in and buying the dip. Now, in terms of the euro, market thinks the ECB, just like the Bank of England, could be quite aggressive with the rate hikes. Our view is they can't, because the economies are nearly in recession. The market is not seeing that. If they raise rates as expected, that's in the price. It'll just wreck the economy. Okay, so speculators too rosy a view of eurozone. If we get to the next chart, it just shows speculative positioning in the euro against the dollar's percentage of open interest. It's elevated in historical terms. This chart goes back to 2005. Then you have this chart here, which shows trend following managed money. They're really long of the euro. If this position starts to get taken out on stop, which we think it will, you're going to see a lot of downside in euro USD. Now, in terms of the economy, right, in terms of these charts of the economy, now the market is looking for eurozone to avoid recession. It just isn't going to do so. You can see PMIs here, leading indicators in the economy. They're showing extreme weakness. That is the blue line. US manufacturing PMIs are the green line. Yeah, US is holding up better than eurozone. This is Europe v US PMI new orders 6-month change against euro USD. There's a lag. Okay, so there go the new orders. So basically eurozone going down, euro USD should follow. Okay, any more charts? Let's have a look at just two more. There's articles underneath this video. There's a link to them on our blog that covers a lot more in terms of background of the pairs we're looking at in this video and other pairs. So this is mortgages and loans to business. It's collapsing. Okay, loans to households collapsing. The economy is in dire straits. The interest rate hikes that the ECB done already are guaranteeing a recession, and the ECB won't want to pile more misery on businesses and households if they can help it. Okay, so market looking for eurozone economy to do okay going forward, and the ECB to be hawkish. That doesn't add up to us. We think speculators are going to continue to get taken out on stop. Actually, I just want to show you one more chart, which is here, because we're going to be looking at the Swedish krona. Sweden is now in recession. Germany will likely follow. There's a big correlation between the two. Sweden already in recession, eurozone just getting there in our view. Right, chart. Right, Euro USD, we're still holding the same position we had in our last video, which is the turn, and we got in at 112.20. When we did the last video, we're back here, saying I thought rallies might fail into 111.50. Sorry, 111 and 111.50. We did touch 111.50. We came down, avoided getting stopped out, lucky, and then we made a little bit more downside. So basically it's a couple of hundred pips at this moment in time, but far more if we can break to the levels we're targeting. Okay, how would you play this one? You could come through the support line, stop behind first level resistance, something like 110.30, and then look for follow-on selling. If we go to the upside, you could key off 110.50 on weakness. Our stop is behind here. Let's just say we are taken out. We've just looked to sell back through this level. Obviously resistance becomes support. Sell back through the level with a stop behind this big red tail here. Okay, so more downside. Now, in terms of anyone new watching our videos, you do not need to use fancy or complicated technical analysis when you've got a bias from the fundamentals and sentiment. You can keep it very, very simple. Okay, we'll see what happens with Euro USD. Now let's go and look at the Euro correlated currencies. All right, USD NOK, you saw the USD really sell off hard. In the last video, we were looking on this candle for some counter trend action to unfold, and we did get some upside, but it's pretty choppy and messy. We've just been stopped out of our long, but I think this dip is a buy. You can see my level at the top there, 10.21 in, 10.08 as a stop behind support, and then just look for follow through buying to the upside. I think 10.80, then 11.20. I'll do an article on the NOK fundamentals. They're bearish. USD has an interest rate advantage. I think crude oil will go down. That could hurt the NOK. Terms of trading correlated currencies, they are volatile. Very often get better risk reward trades in them than in Euro USD itself. Now, if we were to come down through support, I'd probably look to key off the lows for a long on strength. Okay, USD SEK, this one had a big move to the downside, or the USD did, just like in USD NOK. This one we expected the counter trend action and got far more, just got stopped out on this red candle here. Again, we're going to go with an aggressive entry back above 1060 level, 1061, stop behind the tail, look for a follow through up to chart highs. Okay, I think this one actually could move on to 1150 longer term. Things are terrible in Sweden in our view. It's already, like I said earlier, in recession. Last one, the USD PLN. This one we haven't had too much luck in recently. We've been bullish for the last few months, but rallies just faded. Okay, trying again, come through this level here, which is previous support. We had a stop tight behind the level. I just go back above the level, 398.50, give the stop room back to these candles here, three bodies, and then look for a move to 425, then 435. This one is loaded with speculative shorts. Okay, now in terms of the Polish zloty, I did an article on my blog. You can go and check it out in terms of what could happen in the Russia-Ukraine conflict, which will be, if what we think is going to happen, heavily bearish for the zloty, give the USD an additional push to the upside. But I think USD is going up anyway. So yeah, in the European currencies, yeah, we've done okay, and hopefully we get more upside. So yeah, it's a simple three-step process. Yeah, just look at the big fundamental sentiment towards them, keep the technicals nice and simple. And yeah, when you're using, and say this frequently, when you're using the sentiment and fundamentals, you can project ambitious targets. You can't do that just purely from price action. You need to know what the big money is doing behind the chart. Right, that is the video for today. Thank you for watching. Take care. Have a good day.